Hi everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 14th of December. So as we start off this week, which is the last full week of trading before the Christmas break, we're presented with the wonderful news that the UK and EU Brexit trade negotiations are yet again still ongoing. So those negotiations have been extended. We don't have a date as to what the final date of those is going to be at the moment, but true to their words, they are really being run down to the wire. In the background, we also have the US stimulus discussions, which are still ongoing, albeit that they have agreed on a very small agreement for I think it's about a week's period. And of course, the US begin vaccine rollouts as well. So fair few things there going on behind the scenes. Now, before we take a look at the markets, I'd just like to tell you about the live session that we have running on Wednesday. This is going to be the last one this year. So you're welcome to join us. It's run live on YouTube. It's a live stream at 9 o'clock UK time. If you can't attend live, then it will be recorded and posted there as well. Details underneath the video. So let's have a look at the markets here and a look at a couple of opportunities that we're stalking at the beginning of this week. So first of all, if we take a look at the US equity markets, this time we're going to be looking at the S&P 500 futures. And these markets, the reason why I'm looking at this rather than the Dow is because the price structure I think is a little bit more interesting, and the Dow is much more bullish. That's sort of pushing on to new highs, and I just like the price action around a sort of structure level that we have here in this market. So if we just take a look at this from the bigger picture, first of all, the S&Ps, like all US index markets at the moment, they're up very close to their highs, having an extremely strong run since the coronavirus crash. If we have a look at the daily time frame, we can see that here on the daily that the market has already pulled back into the value area. It's sort of finding support here and now starting to see a bit of strength as that market pushes through. Now, of course, these trends are looking sort of quite strong. They've been intact here with good geometry for quite some time, and if this is going to continue, well, then we've got to see a continuation higher and a push higher, and you've got this nice technical low here which is just north of that 3,600 area. So again, if we come down to the 4-hour time frame, you can see that we've got a bit of a structure level through here. Now I've got that level marked in around 3,668, but you could give or take a little bit on that if you got down to sort of lower time frames. And even if you took in from this high here, you can see that that still represents the sort of consolidation, the bottom end of this consolidation that you can see in price action. So price has now gapped up above this level. It's finding support here. It's tested this level here a good couple of times after finding resistance through here a number of times too. So I'm looking at this level here as support. If price action finds support here, well, then there is really only one way to go, and that is for the trend to continue to the high side. So I'm keeping a close eye on this. Of course, if the market breaks below this level, then we're likely to get a gap fill, and there's a fairly decent size move there down to get that gap fill to the short side. So I think there's better sort of technical structure for trading opportunities here on the S&Ps in the early part of this week, and this is the sort of structure that we'll be looking at. Break of this level, looking for a gap fill to the short side, support at this level, looking for strength above these candles for a continuation of that daily trend to the long side. Now if we come over to the precious metal markets and take a look at markets like gold, we can see that these have weakened off sort of fairly significantly over the past few weeks. In fact, we had the rally, and we spoke about this on the live stream and in the newsletter over the past few weeks, and we're looking at potential turning points at the 61.8% fib level, retracement here, that's around 1850. That didn't hold, and we got that last move up here to 1873, and that was the last chance level that I was suggesting last week for this sort of trend here to continue. Since then, you can see that that level has held, and we've had some strong selling in gold as prices have weakened back to the 1828 level. Now if we just take a look at this on the lower time frames, you can see the 1828 zone through here where we've had significant support before. So I think this level here really is the deciding point now for gold. If price action gets below here, then we've got a move down there, a trading window down to 1810. Takes out 1810, then we're seeing moves back down here towards that 1800 level, which is a level on higher time frames, and then beyond. So at the moment we're finding a bit of support around the 1828 zone here, and so we'll be keeping a close eye on this. At this moment in time, within this sort of range, 1828 up to around that sort of 1850, it looks too messy here for sort of trading opportunities. So I'd rather be looking at longs above 1850, shorts below 1828. Now, if we come over to the currency markets, a few currency markets which are starting to look quite interesting. If we take a look at Swiss yen, for example, and I want to come out right to the higher time frames here and take a look at the monthly chart, you can see that price action has been in a trend. We've had a trend now developing here towards moving up towards this significant resistance around 118.50, and you can see that we've still got a bit of a distance there to go. So this is a monthly chart, so that is still quite a way. But we've got higher highs, higher lows developing here. Zones starting to formulate sort of quite nicely. And of course, you know, we can come down to the lower time frames and start to see how this develops on the lower time frames. So this is the daily, and you can see that we've got a nice structure starting to form here. We've got some strong momentum in the indicators, and now the market's just pulled back into 117. We're finding support here, and now we're starting to see a development here. So I'm looking at this to see if this is actually going to be support, and if we can see a continuation of that trend. That still gives us quite a long distance, in fact right off the chart here, for that 118 target level to be reached. If we come down to lower time frames, again you can see on the 4-hour chart and the 8-hour chart we've got a nice turnaround starting to form here in price action again, and there's some rather decent structure on lower time frames. If we come down here to sort of lower time frames, you can see that we've got some nice levels in here clustering with our pivot points as trends are now starting to form. So we're looking at strong Swissy against the yen here, and looking for opportunities for these higher time frame trends to continue. So there's a few markets there that we're keeping a close eye on in the trading room at the beginning of this week. I certainly hope it helps. Look forward to seeing you on Wednesday if you can. If not, do join our newsletter, which you can access on the Smack the Markets website, and you'll get notified of all the sessions that we run, and also get our live sessions posted into your inbox each week as well. Look forward to speaking to you then. Hope it helps. Bye for now.